How's it going, everyone? It is Andre Williams, and over here we talk stocks and we focus on one thing: always protect your profits. And today we're going to be talking about 5 stocks that have gaps that need to be filled to the downside. The reason why I'm bringing this to your attention, we know that there was a strong sell-off on the Friday, and if the market continues to pull back, I can see these stocks filling in their gaps. Can all of them fill in their gaps? Maybe not, but at the same time, it's something you want to watch because we don't know what this market could throw at us. And if you want to be able to trade these plays in real time and have a good indication of, hey, when you should enter and when you should get out, then I highly suggest that you join the private Discord. The links are going to be down inside of the first comments. But outside of that, let's get into these stocks and then I'll give you guys my final thoughts afterwards.
Taking a look at Apple, we could see on Friday it closed at 163.62, being down 3.77%. On the low, it tested 163.56, and then on the high, testing 171.05. And just taking a look at the volume stats, you can see that we traded at 78.961 million shares, and the average volume over 10 trading days is at 62.984 million shares. So you can clearly see that we had well above the average in regards to selling pressure on the stock. Now, the first thing that I want to bring to your attention is the gap area. This is what this video is all about. So we have a gap that needs to be filled on Apple right at 157.70, and you want to look for that break below 159.62. Most likely, I would be keeping an eye or setting an alert when Apple comes down to 160 and breaks below that level, because then the likelihood of it filling in the gap becomes very high. We also have to take into consideration the sell-off that we had on the Friday was quite big. So knowing that the trend has changed, this is why I can see Apple could be filling this gap in the near term. Also, when we take a look at our daily chart with all of our moving averages here, we can see that Apple looks like it wants to make its way to the 200-day moving average, which is at 160.87. So that's why I was saying once we break below this 200-day moving average, that gap should get filled very easily, and we could see it continuing to have a downtrend, especially going into September. So taking a look at Amazon, you can see it closed at 130.75, being down 4.76%. And you can see for the volume, we ended up having 53.323 million, and the average over 10 trading days is at 44.768 million. So we had above average volume, and we know that that was strong selling that happened on the Friday. And now what I want to show you as far as for the gap, you can see we have a gap that needs to be filled right here around 122.94. It tested the low at 130.50. So knowing that we're going to be breaking through this 130 level, Amazon gets even more interesting for this gap fill if these markets continue to trend down. And then when we take a look at our next chart with our moving averages on the daily, you can see for the 200, we tried our best to gain some momentum above it, but Amazon ended up getting rejected. And then afterwards, you can see price action has fell well below the 20-day moving average, and it looks like it's well on its way going to the 100-day moving average, and that is at 125.43. And knowing that we have a gap to fill right around 122.94, I don't see any reason why whatsoever Amazon can't fill that gap if it comes down to the 100-day moving average. Taking a look at Nvidia, ended up closing on Friday at 162.60, being down 9.23%. Quite the sell-off. And then when we take a look at the volume, you can see we traded at 76.913 million shares, and the average volume over 10 trading days is at 50.548 million shares. So we had well above the average in regards to volume, and you can clearly see from this candle that we had, it was quite the Friday. So as far as the gap that needs to be filled, it is at 157.87. So you want to see a clear break below 160. In my personal opinion, if the markets continue to trend down, this should be an easy feat for Nvidia. It could even happen for this coming week. And then when we take a look at our chart with all of the moving averages on there, so we are trading below the 20-day, the 100-day, and as well as for the 50-day. So that's why I'm saying it is very likely for Nvidia to fill in this gap. But what is very interesting about this chart, consistent resistance levels. So we could see it had a very hard time back in June passing above this 193 area. We also see it here again at the beginning of August, around August the 4th, and we also do see it again on August the 16th. So having these constant rejections and now the stock going in a downtrend is something that you want to keep on close watch, especially if you're trying to play the gap fill. Taking a look at Google on Friday, it closed at 111.30, being down 5.44%, and we could see for the volume stats, it was trading at 31.699 million shares, and the average volume over 10 trading days is at 18.091 million shares. So we had well above the average in regards to volume, and that's why we also had a pullback on the stock with the market as a whole, of course. Now, when I want to show you guys as far as for the gap area, it has a gap that needs to be filled at 107.76. So you want to see that break below 107. 108.44. So taking a look at this alone, there's a strong likelihood Google can fill in this gap if these markets continue to pull back, especially if we get that break below 110. So I'll be looking out for that. And then when we take a look at our chart with our moving averages on there, you can see that Google started seeing some resistance at a pretty significant area right here around 123, because we also had resistance at this area back on May the 4th. So knowing that it got rejected, it ended up breaking through the 100-day, the 20-day, and it's also broken right here through the 50-day. So from what I'm seeing from the trajectory of this stock, there's a good chance we might end up visiting even the bottom range right here around 106. So if it does fill in that gap and there's further pressure, you don't need to be surprised about that. And I know a lot of long-term investors will be watching this as well. And for the last stock, we have TTD, which closed at 63.41, which was down 4.26%. When we take a look at the volume stats, you can see it traded at 3.687 million, and the average volume over 10 trading days is at 4.578 million. So this one, we actually had below average volume, and of course, we also saw a pullback. In regards to the gap, as we take a look at our daily chart, it's a pretty big one. So you can see clearly we have a gap that needs to be filled at 55.65. So we want to see a break below 62.56. It saw a low on the Friday at 62.87. So if we get a break below that level, then this is a play that you want to watch very closely. And then when we take a look at our chart with all of our moving averages, which very interesting, when it ended up reaching its peak, it hit a resistance back that it had all the way on March the 7th. And ever since hitting that resistance, it's been selling off, and then taking into consideration Friday, it's still holding above the 20-day moving average. So once we get that break above the 20-day moving average, that's why I'm saying there's a strong likelihood of it filling in that gap. Even when we take a look at how it broke down here when we were in May, it had a big time sell-off, and that's exactly what could occur if these markets continue to be on a downtrend. So keep that on close watch.
So for my final thoughts for all of my bears out there, I know you are getting really excited seeing those gaps to the downside. We know when we see gaps on the chart, they can act like magnets, whether it's to the upside or whether it's to the downside. And considering it looks like the market wants to go in a downtrend, you have some opportunities that you could take advantage of. But the one thing that I want to remind you of, we do have September that is around the corner, which is known to be the worst month for the stock market. So if you are going to be playing options, you want to make sure that you give yourself enough time to be right. A gap doesn't have to be filled within a day or two. Sometimes it could take a week, sometimes it could take 2 weeks. So I want to make sure that you're cognizant of that fact. But if you are going to be taking advantage of some of these opportunities and doing your research, and if you're looking for some help, then join us inside of the private Discord. I have all of these plays listed, and we're going to be watching them to take advantage of those gap fills when the opportunity does occur. And also pay attention to those key levels that I point out as far as where you want to see it break, because that increases the likelihood even further. But like I say in a lot of my videos, the trend is your friend. Do not be naive. The market is not just going to go straight down. We are going to be having some bounces, and when we have those bounces, that is the best opportunity to go ahead and play those puts. So I hope you enjoyed this video, and let's see how these stocks perform for the coming week. We'll talk soon.